Well, I'll tell you what, there were some bright spots and there were some messy spots in today's market. I'm going to cover a few of the brighter spots, but I will say with IWM, for example, that there's a bit of a sign that we have to pay attention to for what could potentially happen over the next several days and what to watch out for. I want to talk specifically about BigBear.AI stock as well, because it's not quite ready to give up the goat yet. We have some reasons to be hopeful for it, some reasons to be cautious in the near term, and then we also want to take a look at Trade Desk, TTD, for its S&P Inclusion, given where it opened today, where it pulled back to, and where it could potentially go leading up to the S&P Inclusion on Friday. And then finally, I want to talk about Coreweave and talk about some of the technicals I talked about on Sunday and where the stock has gone since that time. It was pretty darn incredible. So guys, if you want to see the technicals on this stuff, it's available over at the Discord. Links in the description. Code word doctor when you sign up. Let's pop up the charts on here. We'll kick things off. I got Big Bear AI, but let's actually backtrack to IWM for a moment, because I've been talking about this inverse head and shoulders and talking about the price target of $248 per share for the Russell 2000 ETF here. This is the daily chart that we're looking at. Well, we broke through the neckline from the inverse head and shoulders. We confirmed it. And then we hit this pivot up here that happens to be about 226.04. How close did we get? We got within 1 penny of it before retracing. Today, just a massive engulfing candle with some decent volume on it. This could signal a further drop, especially because it sold down through the 5 and the 13. We want to watch for support down around this 50 period EMA. The inflation report not being received so well today, and also with all the tariff news that's out there, it could really rattle things as far as monetary policy goes. And I will say the Russell 2000 small caps are most sensitive to inflationary risks, and then also the monetary policy side of things. And then if a recession were to come out of that, they're also the most exposed to recession. The least insulated stocks that you have are those small cap ones, at least out of the major indices. So this engulfing candle that we see here, not necessarily a great sign, at least in the near term. Now, mind you, as long as we stay up above the 50 and the 200, well, I think we'll be very golden on this. And speaking of golden, with the simple moving averages that are on here, let me take down the drawings for a moment. Just show you the moving averages. We have the 20 over the 50, so we could see that reversion to the mean on that 20-day. Getting that 50 up over the 200 is that golden cross that we're looking for. This could be that moment where we start to see signs where we could retest it, unless the market starts to rotate down on us, especially where the small caps are concerned. We don't have evidence of that yet. We've had a massive, massive run since April, and so to give back a little bit on top of that, not so bad. I'm still up about 20% or so from when I got my beak wet with some, I actually used V2, VTWO, which is Vanguard's version of the Russell 2000 ETF versus IWM, which is the iShares version of it, just a little bit cheaper per share. So in any case, let's move on from there over into Big Bear AI, which, mind you, this is a pre-profit company. So this is going to struggle a little bit with small caps. So if we see IWM start to take off, that's going to provide a little bit of levity here. Now, what did we see today? First of all, I want to pay attention to the major pivots that are on here, because we caught support down at the 677. That is a historic pivot point that we have, historic meaning in the past. And then up here at 712 and 714, actually 714, 715, my apologies there. We got rejected so far on that, just like we got rejected going back to Friday the 11th. We want to get back up on top of that. Seeing signs of buying pressure is a good thing. If I put the EMAs up on here, I said that this day, which was Monday, closing back above the 13 period was good. I said the next sign that we want to see is a close up above the 5 EMA, and that's exactly where we find ourselves. This green line here being that 5-period exponential moving average. We got to close up above it. Perfect. We also want to see volume hold out for us. The RSI also holding out for us. If we go out to weekly, where's the RSI? 64, perfect. On the monthly, 65, once again, perfect. Take a look at the candle that we're forming on the monthly chart as we're in the middle of July. If we get the top of this thing to go green, not only is that going to be great for price action, but then it can also signal that we could potentially have more to go. We do want to take a look at the other red candles or red bars that we get as we get north of that $7 mark, because, well, we seem that we have a lot of selling pressure that comes in as we get to these higher values up here between $7 and $8 per share. And having only one real strong monthly candle, April of 2022, which even that has a high wick, which is north of $10 per share, which is the last major rip down, that major sell that we saw. So it's going to be interesting to watch how July's candle shapes up. Right now, it's still looking like we're overall in bullish territory. The close above the 5 is encouraging. We want to make sure that we can see another candle that opens up above it and get a full candle close above it and watch what happens as we move north of that. So that's just from the pivots. Now, mind you, we got more pivots coming our way. Here we go. Let me pop up some more things for you. So we'll put the Fibonacci extensions. There we go. There's a pivot that happens up here at $8.11 where we got 1, 2, 3 rejections on the daily chart with more of it in the extended hours of trading. Where do we find ourselves right now? Well, this area of resistance is currently what we're tangled up in, and that starts all the way down at 677 and extends all the way up to $7.36. That's from the Fibonacci extension values and the pivots that we've had before. And if we also put up on there the Fibonacci retracement values, you can see just how dense. I mean, yeah, I know it's a tangled mess, but look how dense the lines are in here. Getting on top of that 741 is actually the number, 741 resistance. Sitting on top of it, treating it as support is going to be huge. And then we don't knot up again on resistances until we get up to north of $8 is where you start to see that density really start to come in with some minor resistances that also happen in between. So for BigBear.AI, do I remain bullish on it right now? Absolutely. Right now, we have the signs that say, at least from the technical standpoint, that now's the time to stay bullish. And we will watch and see if we cross below the 5 and the 13. We fail to keep a hold of that on the daily chart. Signs could say that it's time to start reconsidering our position. Let me drop down to just an intraday chart for you so that we can see how things got treated. Let's go to the 15-minute chart. I think that was actually a really nice chart. And I'm going to take down the Fibonacci extensions on this one for you. And let's do the retracements for right now and just leave the pivots. Because when you look at this, look at what we got with rejection during the pre-market hours. And then we sold off. We came down to the pivot down at 677. We punched through it briefly before rallying back up. And then once again, getting stymied at 714 and 715. Getting up on top of those is definitely proving from today between the regular trading hours and the early trading hours to be critical that we can get up above them. If we can't, we could see a further sell from where we're at right now. And that's as per the 15-minute chart. Let's jump up to the hourly chart just to look and see what that looks like. And we have declining momentum, but still, at least near term, declining from what we saw in the pre-market, but still overall a build from what we had in the extended hours as we sold off on Friday the 11th. So I can't tell you just how huge it is that we get on top of those. Let's put up the Fibonacci retracements for a moment. And I want to pay specific attention to this one in particular for right now, because we actually caught support at 671, which is even better view of support than this pivot that we saw before. We actually settled on that 671 when we closed this red candle at exactly 671. Green candle opened at 672. The low on this was 670. Couldn't keep it. Closed up at 693. But like I said, look at the indecisive candles that we had that followed. We need to get up there. We need to get on top of 714 and 715. That could open us up to that 741. And if I put some of the other retracement values up there, what you'll notice as we start to get near the price action for this thing, once again, there's that density that we looked at on the daily chart. We got a bit to fight through on this. Getting on top of that 38.2 is going to be absolutely enormous. And then if we can get on top of that 38.2. Let me show that one. It was the other ones that I wanted to take down. There we go. Get on top of that 38.2 at 709. And then we have that 0.5 Fibonacci retracement level at 741, which is the value that I said that we need to get on top of. Until we do, this is just a flat old rejection. Let me zoom out just a little bit to show you more of what we have going on. I'll take down the drawings because what you can see in here is also those rejections that we had going all the way back here to these peaks. Then these peaks happen to be right around 722-ish. And then this highest peak that's in here, 728. So the 720s, if you will, is where we find the top of that resistance, where we get that rejection. And then we got selling pressure. As soon as we got up above it, we couldn't hold on to it. We sold back down. But if you were watching my videos from before, I said that we caught an important 38.2, which could be good for strongly trending stocks. This could be that recovery. And once again, just before we move on, 714, 715, that's the first thing that we want to see ourselves sitting back on top of as we fight our way through that resistance that goes up through 741. If we're able to fight through that, and if we get volume support with those moves, this could be another rocket ship for us. If we fail to break through it, we could potentially, instead of seeing the 38.2 that I talked about in my earlier video, Instead, we could see that down to the 50% Fibonacci retracement level, which could be very significant because it would be a full gap fill. And honestly, I think better positioning for us overall for the next rocket ship if we're going to get it from BigBear.AI. So I'm going to talk about Trade Desk, and I'm also going to talk about Coreweave. I posted about Trade Desk being included in the S&P 500, which takes effect on Friday, July 18th. Over at the Discord, I posted about it last night. We got to see the price action today. Now, mind you, some people may have thought about jumping in when they saw it at $85 or $86 per share. And I said better positioning would be if this thing were closer to 80, although maybe even down to 77. We'll take a look at the charts for that. But if you guys want to see the news as it happens, if you want to see the different trades, the different technical setups, the buys, the sells with receipts, I'm just one of the experts over at the Discord waiting for you to come on over so we can support you in your journey towards financial freedom and building alpha in your portfolio. Code word doctor when you sign up for the earner tier. It's going to save you 50% off your first month sign up. Go ahead, check it out for less than $1 a day. Join the thousands of members who are already over there loving the Discord and all the offerings that it has. It is an entire ecosystem there dedicated to helping you through this financial process. And if you want to learn more about making the technicals yourself, drawing them up, if you want to learn about trading on the technicals, using options, there's coursework through Stockmo Academy. Code word doctor when you sign up for those courses. The bundle saves you even more, and it is combinable with that code word doctor. So guys, let's get into Trade Desk, and then we'll also take a look at Coreweave's chart as well. So pop this back up here for you. Trade Desk, here we go. So this is the daily chart that we're looking at. We'll take this down. So just before the news of the S&P inclusion, what do we see from a moving average and momentum standpoint? We were already in bullish territory. We had the 5 above the 13 above the 50. Perfect. This is the 200 EMA here, which we are trading below it. And we're also trading down below the 200 SMA. So on a daily chart basis, this thing's in bearish territory. Getting above the 200s is a bullish reversal. However, we didn't quite get there. The EMA, today we popped up above it. This thing opened at 86 even, and then actually opened at 85.26, peaked at 86 even, and then came all the way back to 80.32, closed to 80.40. So we don't even really see a bottom wick on here. I did say the 80 was a much better entry if this thing is going to take off, and it certainly could run over the next day or two here, but usually with the inclusion, you get a little bit more of a sell-off. So one of the things I got to say is a slight mitigating factor is that there already is significant institutional ownership for Trade Desk, but there could still be some further buying pressure for this. So if we fail to hold the 38.2, that next support that we see is critical at 77.18, which happened to be critical resistance, but now they're above it. It should be critical support. That could make for a very good entry and make for a nice little bounce coming off of that, maybe back up to 80, maybe back up to that 200. But I do think that there's some upside to this prior to that inclusion into the S&P 500. We're going to have to watch for it. Big old red pepper today, getting that rejection off 85.44. Once again, shared over at the Discord last night. So I do have a position in this call option. We'll see if it pans out for us. It is super, super risky because we don't know if this is a falling knife at this point. We don't know if we're going to get that gap fill. But I did make the course members, the Discord members, there we go, aware about that entry at 77 being a lot more attractive than the one up here at 80. So we'll watch and see what we get from that one. Now, Coreweave, I put this video out on Sunday, so here's Friday's candle that we have closing all the way down at 125.84. I said we are right in a sweet spot for a bounce, and we got a big old bounce from this one. So if we go from Friday's close and see where we got to the peak, this thing went up 16.62% for that bounce for Coreweave when I talked about the best stocks to buy now for Q3 2025. So if this was just a very short swing trade opportunity, 16%, not so bad. Well, let's go down to the close for this. That's 11.72%, and it just took 2 trading days time. Now let's do it one more way. Let's talk about regular market hours and go from where the market opened to where the market closed. That is, whoa, that's drawn wrong. Let me try again. Click on that. There we go. One more time. You can do this, Doc. There we go. So go to the market open and go to the market close there. That's still an 8% gain from the market open on Monday to the market close on Tuesday. A very modest gain for us. And what do we see for Coreweave? Well, let's talk about just the moving averages here to see how we're doing. Now, we did dip down below with the RSI. We dipped down below 50. This thing could sell off more. We have some reason to be hopeful. For one, we're up above the 50. Perfect. We're up above the 5. Great. We did get rejected at the 13, which is okay as long as we stay above the 5 and that 5 continues traveling northward to cross the 13. We can get back to that bullish crossover, and you want to see the candles riding on top of the 5. That tells you in bullish territory. It's when you start dangling off the 5 that you start to get in bearish territory like you saw most recently. So that's exactly what we want to watch for. The 5 is probably gonna have a couple days worth unless we really get another rocket ship coming in here pushing us back up above the 13. So if we get back above the 13, that should make it much easier for the 5 to also cross over. And if we take our ruler here and just go back 5 candles, 1, 2, 3, 4, 5, that's actually our closing price up here that goes all the way back to about 153. And then if that falls off, so we lose that day, but then we're going to trade it off for something potentially lower right now, which means that the 5 pushes back down a little bit further. And then also the 13-day likely trading off for something lower as well. So both these are going to dip down a little bit. So if the price action's up, it makes it a little bit easier to cross the 13, and it makes it easier to stay above the 5. If the price action follows the moving averages, then we get more downward pressure on it. So it really does depend. It's a little bit nuanced. But for Coreweave, if we look on a weekly basis, this thing's so new, the weekly chart doesn't show us much of anything. So some of that volume's tapering off. We have the RSI just showing up right around 70 on this thing, trying to price itself in. As we look at that 5 week, we currently got rejected off of it. Sitting on top of that's going to be a further bullish sign for this one as well. So we got the bounce that I was looking for Coreweave, Trade Desk. We'll see what comes out for that. If this thing does smush down for Trade Desk over time, and assuming that we still have a decent market bias backing it, if the markets sell off, well, then Trade Desk also is likely going to sell off with it. But in a decent bullish market environment with the S&P inclusion, if we get a sell the news taking place and this thing sells further, we want to watch for signs of bottoming. And with that, we should actually have some really nice outperformance throughout the next quarter, or throughout this quarter, I should say, throughout Q3. And so I think it's really a nice time to actually start talking about Trade Desk if we weren't talking about it sooner. So guys, come on over, join us at the Discord, code word doctor, the link's in the description, and then also through Stockmo Academy, find that link down there as well. Click on it, sign up using the code word doctor. That's also going to save you a ton on those courses, and they are worth every penny and more, as they can return to you in dividends with what they can teach you through that knowledge, being able to use it out in the markets effectively to better time your trades, to better position yourself and take full advantage of the market movements as they come along. Guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you next video.